Assalamu alaikum, everyone. Am I audible? Yeah. Okay, so first let me start by thanking all of you for joining today's session. We are very happy to share that today we have received a huge interest in this topic. As you can see, we have a diverse group of participants attending from all over the world, from US, Canada, the GCCs, Pakistan, India, Australia. So I'm very confident that your varied backgrounds will greatly enrich this session and provide a comprehensive view of CBAM's global impact. So thank you once again for joining us. So today our topic is on CBAM compliance. We will explore how EU's carbon border adjustment mechanism, known as CBAM, will impact businesses involved in trade with the EU. As we are all very well aware that climate and sustainability in these current time is a very relevant and growing domain in today's corporate world. And your keen interest in this topic has greatly encouraged us to build on these knowledge series going forward. So inshallah, this webinar is the first of many that we will now have, where we will help your industry and businesses, and if you are into consulting, your clients, to fully understand and navigate the various upcoming sustainability compliances in the future. So before we start, let me give you just a little background about myself and HCC. I'm Tanya Chaudhary. I'm a lawyer by background, and I have led the HCC group based out of Dubai for the last 7 years. We are headquartered in the UAE with offices in Pakistan, the UK, and inshallah, now in Saudi before the end of this year. So HCC is a core business technology consulting company. We have been advising clients on their digital transformation processes for over 24 years now. So today I'm very excited to add into our stack of offerings the Climate and Sustainability Division. This division started its journey in other regions last year, and now, alhamdulillah, has expanded its footprint in the GCC. Right. So let me now just go further and introduce to you our remarkable panelists today. I will start with Fawzia. Fawzia Safdar is our director and a technical expert of climate and sustainability, a chartered accountant, an MBA, and an expert on ESG consulting. Fawzia has been a trailblazer in this area. She's a master trainer on various prestigious forms this matter. Her core area of expertise is finance and sustainability reporting. And then I will introduce our second speaker, Dr. Abrar Chaudhary. He's an expert on climate change and sustainability. Again, a chartered accountant, an MBA, and a doctorate in climate and environment sciences from the University of Oxford. Dr. Abrar currently is a lecturer at the University of Oxford, the Said Business School, where he teaches sustainability, innovation, and climate action. Dr. Abrar is a recipient of various international awards and author of several prestigious publications on sustainability. He currently heads our Climate and Sustainability Division of HCC. So before I welcome our lead speaker, Fawzia, let me just walk you through some housekeeping items. This is going to be a 1-hour webinar. We will try to complete it on time, and to ensure everyone can hear our speakers, all other participants will be muted. If you have any questions during the presentation, please use the question and answer box below. We'll be addressing questions throughout the session. So we encourage you to put on a maximum number of questions that you have. If for any reason your question remains unanswered, don't worry. We will ensure that we email you the response afterwards. And lastly, let me just walk you through the agenda of the webinar today. So we'll start with a general overview of CBAM. We will explain its purpose and impact on global trade. Then we'll move into the reporting timeline and obligations, highlighting key deadlines and requirements for compliance. Next, we'll discuss CBAM certificates and their financial impacts, covering how they work and the cost of implication for businesses. We'll also introduce key terms like carbon leakages and embedded emissions. Further, we'll deep dive into the embedded emissions calculations and reporting for exporters, followed by also the reporting obligations for importers, focusing on the requirements for declaring goods and purchasing CBAM certificates. And finally, we'll cover the consequences in case of non-compliance, including penalties and trade restrictions. After the end of the technical session, we will have a very important summary session led by Dr. Abrar Chaudhry, where he will give you practical tips on the climate finance angle of it and how do we fund this transition. So yes, so please continue till the end of the session. We have a lot to cover, so let's just dive right in. I will now hand it over to Fawzia. Fawzia will walk us through the key aspects of CBAM, its implication, and what businesses need to know to stay compliant. So over to you, Fawzia.
Thank you so very much, Tanya, for giving me this opportunity. Assalamu alaikum and lots welcome. And I'm hoping that this your 45 to 1 hour will give you a lot of understanding and knowledge. So you will not get scared of what CBAM is and how to start. So start with general overview of CBAM. We all know that there is one Paris Agreement which happened in 2015 and in which 195 countries have signed. And out of that, Europe is the one who planned and become the leader that they want to become carbon neutral by 2050. So they have lots of, can I have the next slide if you don't mind, please? Yeah. So if we look further, they have lots of initiatives. They have many regulations which is happening in Europe, starting from transportation, electricity, their energy efficiency, moving to renewable energy, becoming the zero pollution region. So lots and lots of happenings are there. And CBAM is one of that, which we will dive in further. Can I have the next, please? And you can see on this slide that there are many. And if we will continue our knowledge sharing sessions, we will be diving deep in everything and we will learn everything together. So starting my story back, 2015, when the Paris agreements come, the next thing which happened in Europe is in 2019, they did one green deal. They made one green deal that how every sector, which is most emission related sector, how to control the emissions and how to reach to their ultimate goal of carbon neutral by 2050. You can see one in the middle, fit for 55. So that is very easy thing to memorize as consultant or as the business industry. This 55 is actually their target to become 55% carbon reduction, carbon neutral by 2030. So by 2030, Europe has a revised target that they have to reduce their emissions in comparison to their emissions in 1990s. And you can see all here that lots of industries, there are lots of initiatives having land use, having transportation, renewable energy, taxes, effective directives, and now comes another that is CBAM, Carbon Border Adjustment Mechanism. So this is something which is, I will just give you a one overview first, and then we will link it that how it is with the Green Deal and how it is, how the monetization will come, how we can control what the strategies are, how we have to get compliant with. So first, very important thing that CBAM is first applicable to all non-EU suppliers. all the suppliers, manufacturers, producers who are trading their products and exporting their products to Europe, they have one hurdle now, that is CBAM. And this is applicable to all non-Europe area suppliers. But if you look at the other side on European suppliers, there is no CBAM application because they are already having one system, which I will discuss in a minute with you. So CBAM is one policy which they adopted because it was difficult for them to have a stringent policies in Europe, so they were able to control the emissions here, but the overall impact, the globe, the overall climate, they were not contributing a lot. That's why they make it that, okay, we will work with the supplier, we will work with the business partners, and we will control our emissions overall. Here you can see one term. Can I move back? Carbon leakage. I want to add here that what is the carbon leakage here? Because as Tanya has also mentioned that we will discuss the carbon leakage. So what was happening from the time this CBAM enter and other trading systems were imposed in Europe, which we will see in a few minutes, um, the processes and businesses, the business owner, they start moving their production to those countries where these policies or taxations or systems are weaker. So they can have less cost while producing their goods. And then they start importing it. So just to avoid that carbon leakage, that it's not happening in Europe, but it's happening somewhere else in the world, and they are just getting goods ready and importing to their area, they just make the CBAM. So CBAM actually is to control that carbon leakage. That okay, nothing is happening in Europe, but somewhere else in the country. So another area of the globe. Well, I just mentioned one thing that this is a continuation of lots of Green Deal policies and lots of happenings which is here in Europe. One of that is emission trading scheme, ETS. Um, I believe that we all have heard this name, but if no, we will see what is here. So if you can see here in the slide, there are two manufacturing facilities, or you can say two manufacturers or two factories. One is A and one is B. So what has happened here in Europe, they have make one cap that this much of like that the top line of the level is allowed emissions for A and B both. So if you can see that under A, their emissions are above the borderline. So above the borderline, right? So they just they have exceeded to what is allowed to them. So if you have given a budget of suppose 1,000 tons of emissions and you raised it to 1,200,000 tons, then definitely you have to cover those emissions by some kind of cover or allowances. There comes your carbon allowances. So there are two ways that either they have to buy these carbon allowances in the open market. You have listened the word of carbon credits, carbon offsets, natural credits. So these are those carbon allowances. Or you go to another same industry or another industry which has less emissions, but they have already the allowances which allowed by the European Commission for them. So this is the purchase and sale of what allowances you have. If you exceeded your limit, the cap, you can you have to buy the allowances. But if you are under that cap, you can sell that allowance in the open market. The reason here to discuss ETS that CBAM is a starting point of ETS, and later on CBAM has to merge into ETS, emission trading scheme. So to make this taxation, this policy fragmented and slow phasing in, they have in European Commission has introduced CBAM. So we will say that CBAM is phased in and ultimately it will be phased into ETS. Can I have the next slide, please? Well, so The reason of giving you ETS understanding right now, because that will help you to understand how the CBAM will be moving onward. CBAM has covered three sectors: cement, aluminium, steel, iron, fertilizer, hydrogen, and electricity. You will be surprised that how they have selected these six sectors. So I will first talk about cement, aluminum, fertilizer, iron, and steel, and later I will talk about hydrogen and electricity. So these four sectors are almost 45% of the sectors which are already covered in ETS, emission trading scheme. So, and this is the most emission created processes or products, and the most trading is happening in Europe from these sectors. So this is not that this is just they have chosen some sectors. There was some background working. There was some data. ETS was introduced in 2019. So since 2019, all the working was done, the reporting was done. And after the analysis, they come to know that, okay, these four sectors are the one they should introduce first, and they have to control their emissions even outside the continent of Europe, right? So cement and aluminum and fertilizer and iron and steel, they are mostly traded products. So these are the sectors which will be impacted first for CBAM. Now we comes in hydrogen electricity. Europe want to control hydrogen electricity right from the beginning, beside the fact that trading is not too much in these two sectors, but they are encouraging that they will just have the acceptance of trading of green hydrogen and clean energy. Can we have next? So just to give you overview that what ETS is covering, because I have already mentioned you that CBAM is ultimately coming and becoming part of ETS. So we should have the understanding where we are standing now, and in future which sectors will get impacted. So if you look at in under ETS, we have energy sector, we have industry sector, and you can see all these sectors are there. So steel, iron, production, cement, manufacturing, this is already there. Aviation sector, and then petrochemical sector. So, and the last is waste management, I'm sorry. So if you look at this, that they have chosen this industry sector, steel, iron production, cement manufacturing for CBAM, and this is actually part of ETS. And you will be surprised. I was just reading one updates and stats of what is happening with the emissions of this aviation and all these sectors. Aviation here in Europe, they have already reduced their emissions by 47% because of this ETS system. Can we move next? Well, so I have already told you that it is applicable to all non-Europe countries. But there is one more exception. There are few countries and territories which are already excluded because they are part of ETS: Iceland, Norway, Liechtenstein, and Switzerland. Other than that, there is a limit which is given that any consignment, I'm not saying the value of the good or anything, any consignment for the export or import in Europe, which is value exceeding euro 150, that will be falling under CBAM. And goods used for military activities, that will be also exempt from CBAM right now. So up till now, I think one thing is very much clear, that what is the aim behind that is to prevent the carbon leakage, that rather than the businesses are planning that, okay, because here in Europe, the policies and taxation is very hard, very strict, cost is becoming so high. So let's move the production processes into the other countries where there are less strict policies and taxations. So that is the way they are preventing carbon leakage by introducing CBAM. It is actually complementing ETS. Like finally, it is going to merge in all the sectors of ETS, and that CBAM is helping the carbon neutrality target of Europe to reach carbon neutral by 2050. And last very important thing is competitive trade. What is happening right now? If the production is happening in Europe, definitely they have to buy the allowances if their emissions are getting more than that cap, or they have to pay further carbon tax. As compare, if a business will get the production imported from another country, definitely that will cost less as compared to the production in Europe. So to stay competitive in the trade with the relation of the pricing, they just introduce CBAM. And one thing is very important here. Now, to stay competitive is less marketing strategy, less how you promote your product, is the carbon content into your product, which is making you competitive for the trade. If your carbon content of the steel product or aluminum product or fertilizer product is less, then you don't need to pay any tax on that, and that will becoming less expensive. So the carbon content of the goods will now define the pricing and you to stay competitive in the trade. I hope that you get a very rough idea that what the CBAM is and what the ETS, and ultimately this CBAM regulation has to part of ETS. Let's see that what is happening from now onward and how we have to do the reporting of these CBAM regulations. CBAM was introduced in May 2023. What is happening fast, I will move fast. So in May 2023, this CBAM regulation was approved, and from October 2023, every import, or rather, if I will say export from these sectors, they have to start their reporting. And reporting of what we will discuss in a little time. And then first deadline for the first quarter report was January 2024. So for every quarter, very next month of that quarter, you have to do the reporting, and you can do some kind of modification, adjustments, revision for the next 2 months. So if I will just give you the idea, if your reporting date was October 2023 and you are giving the report in January 2024, 31st January, you still have 4 more months to fix if there is any mistake or readjustments. And this transitional period is going till 2025. And then another period come, that is definitive period. That is, we will discuss later. So what is happening in transitional period and what is happening is definitive period. Why they have divided into two? So transitional period is the period in which they want businesses to get equipped with the understanding of CBAM. What is the reporting requirements? How to measure the data under the CBAM, and how to report. So there is no financial obligation involved in this transitional period. Businesses have to do the quarterly reporting. They have to add how much total amount of goods imported, how much emissions are involved in that. And if you have paid any kind of carbon price in your own country, you have to give a proof of that, and that will be adjusted in your CBAM calculation. But till December 2025, there is no financial obligation. This is the reason they have divided CBAM reporting timeline into two parts. So transitional period is you to just monitor, report, and get ready. And the next period is definitive period, that is starting from January 2026. This is the time when you have to buy if you are exceeding some limit of the emissions for the product. That excess emissions, equivalent to that emissions, you have to buy some kind of certificate, or you have to pay money for that excessive emissions. So definitely, if we look at into the supply chain, to the end consumer, some of the part will definitely transfer to that excessive cost, but this cost will be spread into the whole supply chain. So the importer will spread share with producer, producer with their supplier. So this whole supply chain will get affected with this extra cost of CBAM. And then in December 2030, there will be a review of ETS products, and more products and more sectors will be added from ETS sector to CBAM. And by 2034, they have planned that they will eliminate every free allowances, which I have shown you that there's a cap and trade limit. So if somebody has less emissions and they have the cap, they have the allowance, they can sell that allowance in the market. This whole system will finish and every excessive emission will be taxed, and you have to pay the price that will be carbon tax or carbon price. So in this definitive period, there will be financial obligation, which is not in transitional period. Whatever data or report you are submitting with the authorities, that data has to be verified. From quarterly reporting, they moved into the annual reporting. Rest is same, that you have to give the total amount of the products imported, the emissions in that, and finally, if you have paid any kind of prices of carbon dioxide emissions in the country where those products are or goods are produced. So I would say this transitional period is a relaxing period for us. We can do mistakes, we can do errors, we can rectify. There will be less fines for that, less financial implications. But 2026, January 2026 is the date when the things will become more organized, more strict, and financial obligations will be there. Let's see that I'm saying again and again that it has to merge to the ETS, right? So from 2026, if you look at from 26, 27, 28, 29, 30, and moving to 34, starting from emission percentage 2.5, they are reaching it to 100%. Like here in the first year, 2026, only 2.5% of your emissions will be taxed. And then moving to 5%, then 10%, and they have increased it till 2034. Whatever your emissions will be involved in the product, if 1,000 tons or 2,000 tons, all the emissions, you have to buy the CBAM certificates and you have to pay the tax in form of CBAM certificates. Can we have next? If you look at the graphical that look from 2026, everything is merging and CBAM and ETS is becoming a new system or a combined system, right? Here I have just given one example, a quick one, because I have seen that we have lots of chartered accountants and financial consultants and finance people are here today in our webinar. So I just thought that we should add some numerical data also here. So if you are exporting 1,000 tons of steel, and the price, the total emissions in 1,000 tons of steel is 1,600 carbon dioxide equivalents. It's just the assumption. It's not the actual data. So from 2026, you will just start multiplying with your emissions the price of ETS. Why the price of ETS? I will tell you in just shortly. We will discussing this. So the price of ETS, which is actually the CBAM price, €1,000 per tons of carbon dioxide equivalents, and every 1,000 steel, if you look at from every year, it's becoming costly till 2034. So it's a good time that we can look into that, how we have to revisit our processes, and we look at that how we can make our processes sustainable, where emissions can be controlled. So this heavy pricing will not become something which will be affecting our competitiveness, or we have to share the market with the people who have already controlled their emissions or move to the sustainable practices. Can we have next, please? Well, so I'm talking about financial impact. I'm talking about ETS price, right? So what is happening, that there is one price which is set for CBAM certificate. So January 2026, CBAM certificate you have to buy if your emissions are more. How these pricing will be done of these certificates? So what is happening, that under the emission trading scheme system, where all that sale and trade of allowances are there, so in 1 week, how much pricing was up and down for the sale and purchase of those allowances, that price will be averaged out, and the start of every week that prices will be announced for CBAM certificates. So you can say that the CBAM certificate price will be the average of ETS pricing or trading pricing and average of those prices. And that one price will be applicable throughout that week for you. For every week, this data will be revised, and what will be the current pricing, that will be updated. So you can say that we have a good knowledge of, securities and how the shares and business values are going and up and down. Likewise, ETS pricing or the allowances under or carbon credits under ETS, they are already like priced in this emission trading systems or systems. Here, I want to add one very important thing that probably you guys are thinking, okay, this is only happening in Europe. No, the update is US is also going, they are planning to implement this. Australia, Canada, New Zealand. So these all countries and Japan. Yeah, I was missing one. So these all countries has already working on this, and sooner they are going to implement this CBAM mechanism into their own system. So you can imagine that globally this is something going to implement. So we left no excuse being the manufacturer of these six sectors, or we are also looking at that sooner they will be revising the ETS sectors. That what are the sectors in the ETS, which I have shared with you. They are right now looking at energy, they are looking at aviation and manufacturing. So expect that they will be adding in the end more and more sectors where they want to control the emissions, where they want to transform the processes. So before we will move to you, I hope you will allow me to have one sip. Well, so before we move to the process that how this CBAM regulations, like I'm sure that everybody is now familiar with the word CBAM, carbon border adjustment mechanism. So I believe that in this session, we should have some key terms to discuss together so we can understand the mechanism a little bit much better. So I'm hoping that we all know manufacturer, we all know production facilities. So instead of these two terms, CBAM has given installation operator. So instead of the production place or facility or factory, they have used the word installation, and the owner of the installation of that manufacturing facility is the installation operator. So one actor or entity which is involved in CBAM is the installation operator, and he is the one who owns the installation, which is the stationary unit or the production place or the production processes where it is happening. That is the place. So you can use installation operator as the owner of the manufacturing facility, and this is the manufacturing facility. But now onward, I will be using installation operator. So the people who are manufacturing these CBAM goods, and installation is the place where these CBAM goods are getting manufactured. CBAM has categorized goods into two ways. They have seen goods into two ways. One is the simple goods and one is the complex goods. So simple goods is all the goods where the input has the input for that simple good has zero embedded emission. I'm not using embedded emissions a lot, so I'm just making it zero emissions, right? So if I will give you the idea of any natural product or material which you are just getting and putting into your process, it has no emissions in the processes. So that will be simple good. And I will give you the more example of this. So that will be steel, which I will giving you example shortly. So simple good, any raw material, any input into the processes having no emissions. Those are simple goods. Other than that, all are complex goods. And here, one word I want to introduce is precursor. Precursor are all raw material inputs or fuels which you are adding into your processes. So we will use the term precursor, right? Next. Okay, so we have seen operators, installation operators, installations. We have seen simple and complex goods. Now, what is the data? Which emissions we have to do? So everyone who has come from sustainability reporting background, for CBAM, you have to close your thinking about that scope 1, 2, 3, GHG protocol or ISO 14000. You have to close that one because CBAM has their own definitions and CBAM has their own categories. So they simply made two emissions, direct emissions and indirect emissions. Direct emissions are all the fuels and processes which are directly involved in the production of the goods at the installation facility or at your manufacturing facility, installation or manufacturing. Indirect emissions, I will give you the idea, just think about scope 2, but then close that one. So indirect emissions are all the electricity you have purchased. And here is one difference. That electricity which you have purchased and used into your production process, that electricity you are producing in-house or that is produced any other place outside your installation, doesn't matter. So whatever the electricity you purchased, used in the production processes, that is your indirect emission. And now here you have to remove few things. They are not talking about the transportation cost. They are not talking about any other thing, right? So focused on precursors. What are your inputs to the production? What are the direct and indirect emissions of those input materials or fuels? And what are the direct and indirect emissions of your own production process or the process of your final good? Well, so let's I give a very simple example. Steel. So you look at that steel sheet is the simple good because the precursor or the raw material is crude steel. It has no emission in the production, and you will be moving to steel card body, that is the complex good. Right now, CBAM is focusing more on the simple goods and they are avoiding the complex goods. From where I will find out? I will tell you that how we have to find out either my goods are simple goods or my goods are complex goods, or either the my goods are CBAM goods or not CBAM goods. Or every information is available. We don't have to make any assumption or judgments. Well, so I have already introduced you one part, that is the installation operator, right? So installation operator are all the manufacturing owners outside EU countries. I hope that we are aligned. And next is your importer, the actor or the entity who is sitting inside the Europe and who is asking you that I need this much of the steel, so let's do this transaction, and they are exporting and they are importing. So that one, that importer is actually the reporting declarant for CBAM. So this all CBAM requirement or the CBAM responsibility, the main responsible person to do all this reporting is the reporting declarant or economic operator or importer. So these are all same, or their representative. We will discuss in the next session more into detail. Let me give you the first basic structure. So the first I have already given, installation operator, now is the importer, and then comes the custom authorities. So custom authorities are the one who will be connected to this reporting declarant, and they actually give you the requirements, that what CBAM reporting requirements are there, how much goods you have received, what is the quantity. So this is the coordination of importer and the custom authorities. And next we have national competent authority, and finally we have European Commission. Before we move onward, I want to share one thing. European Commission is the one who is making all kind of reporting guidelines, policies, and regulations. European Commission is advising custom authority how to tackle at their place all this data, and European Commission is dictating all this to national competent authorities, that how you have to look at the data which is submitted by the importer or reporting declarant. So, who is this national competent authority? National competent authority, every European country, they have their own national competent authority. So, if I'm sitting in UAE and I want to start export to Spain, so this my reporting declarant will be sitting in Spain. This is the custom authority who is managing my imports. And this is the national competent authority which is sitting in Spain. So this all connectivity is through European Commission. Now, how the data will be entered into these entities. So a reporting declarant will get the idea from custom authority. Can we have next? Yeah. So reporting declarant will ask the installation operator that give me the emission data of the goods you are sending me through the export. Custom authority will inform the reporting declarant or the importer that this much of the goods you have received. So you need to submit this list of the requirements to me and to the European Commission. So the information is coming that what they have to submit is counter checked from custom authority. The data is ordered or requested from installation operator. Those are your exporters. And this reporting is done to European Commission registry. And that registry is accessible to national competent authority. They will check that how accurate your data is. There are some indicative assessments, which is already, I have told you that European Commission is the one who is doing all the analysis of the data and giving all the indications, guidelines to the national competent authority to assess the information and to tell if there any other additional information required or not. So the actors are only 5 actors involved in CBAM: your importer, exporter, custom authorities. Even before CBAM, all these import and export is done through custom authorities. And then European Commission is the one who is managing all this CBAM mechanism, and national competent who are overseeing all these reports and data and making it correct and giving this indication to European Commission that whatever you have given me the instruction, reports are correct or verified. So we have seen one structure that how it is happening. Let's look at that what exporter has to do, how what emissions to calculate, how to find out which data. So like other emission calculations, or we first have to make a boundary that okay, there are possibility that if I have a production facility or installation facility and there are more goods produced, but not all goods are CBAM goods. So I have to check that which goods are the CBAM goods. I have to map those. I have to map the production processes, production routes, and then I have to define my reporting period. After that, I have to check the parameter that how I'm going to calculate. There are some calculation methodologies given by European Commission that this is the way, if you will calculate your emissions in this way, we will accept. And then you will be doing the monitoring of these parameters. You will do your direct emissions monitoring, how much energy flows are there, how much energy consumption is there. And definitely, I have told you, one is your own installation direct and indirect emission, and one is your precursors direct and indirect emissions. You will align these all according to the instructions given by the European Commission that how you have to report and calculate your emissions, and you will communicate it not to any authority, to your declarant who is the importer. So I have like given you already idea about this. Identify the goods and precursors. For that, you have to go into Annexure 1 of CBAM regulation. They have given already the list of all the sectors which is coming under CBAM, and you will check your applicability. If your product A, B, C, D, they all are coming in CBAM goods, or only B or D are coming under CBAM goods. So you have to check your applicability, and the source is Annexure 1 of CBAM regulation. And one very good tip here, that okay, in that annexure you will go, you will find their CN codes, the combined nomenclature codes. So these codes are given for all these 6 sectors. You will just go and check the name of your good. You have to check in that code, because that CN code will be giving you further reporting obligation, requirements, data required, which gases are involved, because not all greenhouse gases you have to calculate for these 6 sectors. They have specified, suppose for iron and steel, they have mentioned only carbon dioxide, but for others, they have added more. So all you have to see, you will find under the CN code of your good. So I will just give you probably a steel manufacturing production here. So for steel, your inputs are coke, coal, optional fuels, and you are going into coke oven. Here you have the carbon dioxide emissions. Then it's moving to the next process, and there you will be having the inputs again and the output. And then again, you will be having carbon dioxide emissions. That's sinter plant, and finally the steel making. Steel making, I was just, I have a visit to one of the steel making factory, and it is literally difficult to stay there. It is too much heat oriented, or you can say hot place, where you have to be so much careful. So you can see that one hot, very hot process, how much fuels and energies and how much electricity is involved there to melt the core and coke and fine and lime and converting into steel making. So this is like a lot emissions involved process. So for every process, you have to calculate your direct emissions, and definitely the indirect emission if you are having the electricity involved, which is there obviously. So EU Commission has given you 2 ways of calculation. One is calculation based. We are having a stop here. It is simple standard methodology and mass balance methodology. So standard methodology is what? So being a finance person, I will just look at the quantities and inputs consumed, and I will just multiply with the factor, emission factor. And for mass balance method, I will look in the suppose 1,000 tons of steel. I will look at how much was the input in tons and how much is the output, the steel itself. I will just compare the emissions in both inputs and outputs, and that reporting will be done under mass balance method. And the final is the most accurate one, is the measurement balance, which is most, you can say, preferred by European Commission. That is that you have to continuously monitoring your emission system to find out that which greenhouse gas concentrations are there in the processes. So you are mapping all the process, finding out the hotspots, converting into emissions, and determining what is the overall emissions there. So it's just the overview again. The heat flow, definitely fuels, electricity, whatever you are consuming, those are all your direct emissions. Even if there are any waste gases, electricity consumed, and then what you are doing with what is happening with the precursor. And precursor, again, I'm saying your input, the input to your good. It's some raw material or any other thing, whatever you are inputting to produce your good, that is your precursor. So you have to divide your direct and indirect emissions of your own goods and processes and the precursors. What are the data sources? To just give you the idea that what the activity data will be, definitely that will be your fuel quantities, net calorific values, oxidation factors. These are all data which you can easily find, because when these steel, aluminium, fertilizer, these values are there for you to calculate how efficient your processes are. And then capturing the activity data is you have to give the unit of the measurement, continuous metering is involved, justification of the, if you are using any kind of assumption justification, you have to give the justification. Because when you are reporting, you have to submit all your calculation based to that report. So whatever the emission factors you have used, even if you have used CBAMs, sorry, European CBAMs giving data, that is just generic values which is applicable to everybody, every region, every country, or you have your region specific emission factors, which is the most accurate and most desired data right now for any country. So you got the idea. My main purpose is that you will just get the idea of direct and indirect emissions, precursors, production processes. And now we just look at that, what actually we have to submit in that report to our importer. So the exporter, the manufacturer, the installation operator, what they have to give the information to the importers or to the declarant of this CBAM. Type of the goods that is identified with the CN code, which is already given in the European Commission registry. How much quantity of the goods you are importing or exporting, direct and indirect emissions, which you will calculate using those three methodologies. If there is any carbon price already paid by you in your region, you have to inform that because that will be adjusted in the calculation. The country where the carbon price is due, if you are wherever you are, if you are exporting to Spain, that country, origin where you are manufacturing that, where your installations are actually located, and the production routes. They are preparing you to move to the actual data actually. Because if you will giving the origin of the imported goods, they will be more focusing on what the emission factors are most appropriate for that region. If you are giving the location, they are looking at, like for the emission factor calculation, these all informations are required to be more and more accurate. And then the exporter's duty is done, and exporter has given this all information to the importer or CBAM declarant. Now we will look at what importer sitting here in the Europe will do. So in the transitional phase, we have two phases. One is transitional, one is definitive. In the transitional phase, there is a transitional registry at European Commission platform. There, the reporting declarant, if you see, okay, before we move on, the green are who are involved in the green arrows are who are involved or connected with the registry, and the brown arrows are who are not connected directly with the registry. So the manufacturer or operator of the installations, they will give the data to the reporting declarant, the importer, the entity sitting inside Europe. They will coordinate with the custom authority to look to confirm that all the requirement which is required for that specific good, either that is fertilizer, steel, aluminium, whatever the sector is, all are complete, or he has to go back to the manufacturer to ask further information. And then custom authority will confirm that, and then reporting declarant, who is your importer, they will submit the data in a prescribed form. Everything is there. The European Commission has made very beautiful transitional registry, very user friendly. You will just input the data there, and custom authority will also have the access to that data to confirm that everything is accurate. And then European Commission has the access to that transitional registry. And right now, because the data is still based on more estimations, assumptions, and some kind of default values rather than the actual regional emission factors. We are using, if I'm sitting in Pakistan or I'm sitting in India, so probably I will be using more the default values, which European Commission is saying, okay, if you don't have the original or regional, use this one. So they are checking everything. So European Commission has the eye on this registry analysis to make further guidelines, and National Competent Authority is checking the completeness and accuracy of this data. So this is again the same thing, but we just expand it a bit, turn by turn with numbers. I will just have a sip of water and you will look at 1, 2, 3, 4, 5, 6, and I will just give you the overview. Well, so if I look at number one, the goods are getting imported. So the imports are coming in Europe, coming to importer. So second, importer is checking with the custom declaration. Information is asked. They are coming and going. If you see the two arrows, and then if there will be here, like this one financial impact is still in the transitional registry or transitional time. If after revisions and revisions, which is allowed for 2 months, if still you are under reporting your emissions or there is any error, you have to pay the penalty. So who has to pay the penalty is your importer reporting declarant. So if there will be any under emissions reported or there is any error, and that is around, I think, 10 to 15 euro per ton, which you have to pay. So European Commission is giving you both the options. You want to input all the data manually, or you want to use any kind of software. And there are lots of CBAM softwares. And actually, at HCC Technology, we have partnership with Microsoft, who have already worked on CBAM. We have many other vendors with whom HCC Technology is working. So that's a great platform where you can automate your data for your CBAM. So you will avoid any kind of error or risk of manual data inputs errors, or there will be all the processes automated. You just have to input the data and the automated reports will be there. And further, but at the moment there is no requirement to get automation. So you are easy to, like, if you want to do manually everything, it's already there. You want to automate, it's your option. Definitely automation will have investments. So the preferable, the start with is manual, start manual, so you know all the processes and the data required, and you have the understanding what is the ultimate purpose of this transitional period, that every business should have the monitoring and reporting and understanding of CBAM regulations and the requirements. So we have collected a few templates here, which is already part of the European Commission platform. They have given you CN codes. They have given you the journal information, installation emissions data requirement. If you look at and you go into the European Commission's registry, transitional registry, you will have this Excel files, which is to somehow connected. If you will input that, they will automatically calculate your emission factors or emission data. Well, so this was an overview of what importer and exporter have to report in CBAM. If there is a non-compliance of the reporting, what will happen? Penalties, which I have already told you, that it's 10 to 15 euro per tons. And if you are under reporting, or if you are repeated after 2 years when the revision is allowed and you are still doing the mistakes. And then definitely custom authority will make one database of rejections and approvals and penalties. All your credit history will be maintained there. And if you will be having lots of penalties and non-compliances, definitely custom authorities will get, they can ultimately maybe make you blacklisted for the non-compliance, or probably you will be having you will lose your market share. So just summing up, I know you have heard a lot. I tried to stay simple as much as possible. What is happening from CBAM to ETS? As I told you, transitional period is from October to 2025. So January 31st, 2024, first CBAM report becomes due. Next, January 1st, 2025, EU becomes methodology becomes mandatory, which I was mentioning you what is the preferred methodology of EU for the calculation of your emission data. And in the same year, they will issue in by the end of 2025, in the same year, Commission will issue the first review of possible extension of product scope. So right now there are 6 sectors. They have the analysis of whatever the reporting is there, all the reporting data they will analyze, and they will review and give you the review extension that how what other products are added. By the end of 2027, everyone has to purchase and surrender, because from 2026 is the time when the regulated, mandatory, accurate, verified reporting will start. So now in the transitional phase, quarterly reports are there, but from 2026, annual reports will be there. So every following year, May of 2027, you have to start. Okay, I think I'm using lots of numbers, and this may be after the full working day giving you a headache. So just giving you the idea that be vigilant what is happening in the end of 2025, and you have to see that either your goods or your sector is added or no, or what is the plans onward. Then 2026 is the alarming time, because you have to start your proper verified annual reporting, and that report is due next year 31st May. By 2030, again, they will be giving you a revision of the products and the sectors, because their ultimate goal is whatever the free allowances are available in that cap and trade. And if one manufacturing is having less emissions and they have those free allowances to sell in the trading market of carbon credits, that will be phased out and all the emissions will be taxed or priced. And the purpose of this is that they are asking everyone, either in Europe or outside the Europe, around the world, reduce your emissions, transform your processes, and there is a phased out, like we have still the time. If we want to stay competitive on the globe, if we want to keep our market share, we have no option, and this is the compulsion that we have to revisit our processes and to become compliant. And where we are standing here. So let's have this travel together and help each other and stay competitive in the trade market. I will request, take 2 minutes, take use your phones, use this QR code, and just fill the feedback form, because we are planning to have this knowledge series and learning together. So whatever is happening here in Europe and UK, Australia, Canada, we will be updating everything to you guys, and we will be continuing this knowledge series. But definitely we will look at what you need to understand. We will prioritize your learning, so we will not stay behind the level where we have to be. So I will be quiet for 2 minutes so you can give the feedback. One more minute, just everybody give the feedback, because we really want that this knowledge series will become very much focused. What you guys want to learn, we will just rank and bring those sessions for you. Well, and at the last minute, and I would like to hand over the session to Dr. Abrar to share what is, because here comes a question that, okay, we will do this transition, everything. What about the finance? How we should do? Everything is so expensive. Inflations are like touching the sky. So what, how we have to do? So what is the option available to us? How we have to decarbonize ourselves? So here I would love to hand over the stage to Dr. Abrar, and he will share his insights to all of you. Thank you so very much for your precious time and listening to me. And I hope that your takeaway is that what CBAM is. Thank you.
Thank you, Fazia, um, for this very informative session. And thank you, everyone, for your time and your attention as well. We're obviously, our motivation for doing these webinar is your attention. And whatever is valuable for the audience, we would love to keep expanding on this series. And of course, what we're seeing a lot is lots of regulations are coming up. There's a lot of requirement that's coming from different countries, and that does require a lot of our attention as well. And our role here is to unpack that for you and to make it easier for you, so at least you're a step closer. But it's also really important to understand, like we've gone through CBAM, we've gone through these requirements, and I'm sure everyone um, focuses, oh, we have more regulations coming in. We're already doing so much, but we have to think about what is really the objective of CBAM. And the objective of CBAM is that we have to reach our emission targets globally. For our temperatures to remain, to limit them to 1.5 degrees or 2 degrees, we have to get to a net zero world. And CBAM is one mechanism that is now trying to price our production. So there's a carbon price that's being added. And ultimately, as manufacturers, as producers, this will become a cost for our business. And this will be passed on ultimately either to the consumers, but the ultimate objective is that it's not a cost that we should continue to bear. Because if there is a carbon price that's set on the product, it's not in our interest that we keep paying it. But then really, how do we start to innovate as manufacturers, as businesses, to start to reduce our emissions? So ultimately, our manufacturing is also net zero. We're actually not producing any emissions. And so the goods that we do export actually do not carry a cost. And I think that's where our comparative advantage starts to come in. So I would encourage all of you to think of CBAM not as a compliance mechanism, but as a strategic mechanism where you start to think about your strategy, but also to think that, while this has started from EU, and remember, lots and lots of regulations come out of EU that are then eventually adopted by the world. And EU has been at the forefront of putting all these regulations out there. So this will happen all across the world. So we have to start thinking of emission reduction as a proactive strategy, not as a reactive strategy, not as compliance, but what can we do about it? And it's absolutely necessary if we want to maintain our market share, because more and more your importers will start to demand emission reduction. And really, those emission reductions need to happen at the manufacturing stage. So this obviously, again, opens up a new era for us, that rather than for us to think of our importers as our customers, and for the importers to think of the manufacturer suppliers, we have to really start to partner with each other. Because really, if you think about it, uh, both these sides are helping each other. By manufacturers reducing their emissions are really helping the importers in their own production, in for them to meet their own goals. Um, but always, this big question always starts to come in. Okay, so who's going to fund this? And it's not a simple question, right? Because we're always thinking, okay, fine, I'm happy to reduce my emissions, I'm happy to upgrade my technology, I'm happy to upgrade my processes, but it's going to cost me more. Because suddenly, the expectation will start to come in that, okay, maybe I need to move my machinery to low emission machinery. So I'll give you some ideas, and we can always have another longer session on climate finance. But how is this working in rest of the world as well? Like, what is happening? So the first, obviously, line of climate finance is traditional finance, right? You start to talk to your financial institutions, because many of these financial institutions are offering lower interest loans in many cases. Sometimes they're promoted by the government itself. So, for example, in Pakistan, we had a reduced interest rate if you wanted to move to solar energy. And I think many countries are promoting um, low energy solutions or technological upgradations, or there are R&D financing available. So, the first call port of action is, talking to your financial institutions. So going there and saying, we want to move to low emissions, what can you support us with? What are the facilities? What are the opportunities? A lot of multilateral development banks are working in this space. So, there are energy facilities available. I know IFC is working. It might not give you reduced interest, but definitely it comes up and gives consulting to help you identify some of those financing areas. So, World Bank, Asian Development Bank, energy councils, many of the multilateral banks are also working and looking at the facilities. And then, of course, we have a lot of these dedicated climate funds as well. So, for example, Green Climate Fund is working in emerging economies. It's offering equity. It's offering concessional loans. It's promoting co-financing. So there is also an opportunity to apply to many of these funds, and they are already funding innovative ideas. For example, in Bangladesh, they funded the textile industry, although textile industry is right now not in CBAM, but they have funded energy efficiency in textile industry as well, or in transportation. The next stage is really looking at this climate venture capital landscape. Lots of VCs are now trying to invest in climate, and they're looking for innovative, proactive manufacturers, where you can actually get equity finance from them, that will help you actually finance this transition, because a lot of VCs are now looking at investing in climate tech, climate technology, climate manufacturing. So I would encourage you to start exploring that as well. But then finally, I think that where a huge opportunity exists is really start to talk to your importers as well. Because remember, as I said, it's a partnership arrangement. We no longer just suppliers or manufacturers, we're helping each other. So lots of large retailers, importers are also now thinking about, investing in their supply chain. So if you're a manufacturer, you're actually a supply chain actor for these larger organizations. So the idea is, how do you start to talk to your ultimate buyers to say, okay, how do we partner together, and we will offer you low emission manufacturing, but we want long-term supplies for you, or we want long-term guaranteed purchase agreements from you. So those are some of the mechanisms where we're seeing innovation and climate finance originating. And as I said, happy to have another session on this. But I just wanted to conclude. I know we've gone over time, so I really appreciate your time here as well. But we will be, carrying on other sessions. I again thank you for all the wonderful questions that had come in. I think most of them we've answered, but any open question that we have, we will kind of sum this up and send you across. And then just maybe one final thing, and I just want to check with the team. Are we carrying a small poll? Because we want to see what are the sectors. Now we've introduced you some of the sectors that CBAM has started with, but I also want to say that many sectors will come in. So although, for example, textile is very important in Pakistan, is not in CBAM, but there are policies and procedures that are being put in that will make textile a sector as well. So ultimately, each and every sector will become part of this carbon taxation. So we will continue to do these series, but I can already see that the poll has started and people are answering, and we'll take that in consideration. And as I said, we'll prioritize the sectors that you want to hear from. And we will also then, see whatever other regulations are coming up again. So I'll just wait for the poll to quickly end. But once again, thank you so much. We've recorded the session. We will also share the recording with you. We have your emails, and now you will be in our mailing list to make sure that we send you more information. We'll send you more information on our next series as well. And again, I just wanted to thank the HCC team, Tanya, Fawzia, and then there's a whole team that's sitting behind the scenes that is really helping, answering questions, and making sure that we were able to interact. So I think we have another 30 seconds for the poll, but I think it's kind of slowing down. So I think we see electricity as a major interest area, and we're happy to talk about electricity. And I think then we have iron and steel that's prominent as well in fertilizer. So we will certainly take this into consideration in our next session. So on this very note, thank you so much for your time and attention. I hope you have a wonderful rest of the week, and we look forward to interacting with you. Thank you so much.